Well, good morning. Today is the 21st day of September 2016, and it's a Wednesday. And today the Federal Reserve will have some words, some interest rate stuff coming on at 2 o'clock to 3 o'clock. And expect some volatility in today's markets, but precursor to such has been volatility today thus far at about 3.5%, with the market currently up about 2%, breaking above this 18 average band up to the running average from the $21 high back at the start of July. So then, with the low volatile session, I was stating yesterday that it was the third lowest of those two that I've just pointed out. Each one of the previous two had up moves that followed it, with this one and of course the big one in the month of June. And I also stated that yes, a little bit of things that I liked was that support was found at previous resistance. So that gave me, I don't know, a 60% chance or 62, 63% chance it was going to be a decent sized up move versus down move. I don't know what the percent odds, but I'm going to talk a little bit about percent chances when I talk about the Fed after this chart video. However, the movements are usually very volatile, so don't be surprised to see between 2 and 2:30 a big move over a short period of time, 2 minutes, 5 minutes, 7 minutes, 12, something like that, either up or down. However, if it starts up, expect a decent down move to follow afterwards that will give back most to all of its gains, or vice versa, after it goes down in that quick period of time, to have a reversal where it will give back or bring back most or all of its losses, kind of deal. And then after that, just do a whole bunch of whatever. So that means just do a whole bunch of things, and then boom, it goes up, and then down it goes just really, really quickly. That's very common when the Federal Reserve says their stuff. And if it's going to go up or down consistently, you'd probably see a move that goes up, something like this, maybe come back up and then go up again. However, oftentimes, again, when it has like maybe a 40-cent gain, it's going to give back 20, 25 cents, a decent percent of what it will end up making on the move, that is. So with the article that I read today, I just had to chuckle a little bit. I got one paragraph from the New York Times which states, "The Fed fund futures used by investors to bet on central bank policy suggest just a 15% chance of a rate rise on Wednesday, according to the data from CME Group." Now, New York Times has this paragraph in its article, which is ironic that betting on Fed funds is investing. Yet you will rarely hear about poker, sports gambling, blackjack, etc. to be a form of investing, and I use 3 games in which players can have a long-term positive return on investment. Because you could be looking at, okay, what's the chances of a particular team beating another team? If you can come up with, oh, I'm getting a little over 60% odds, or I'm getting close to even odds, that's a good bet. And technically that is. And if you knew for sure that there was a very good likelihood, it was around 15% chance of a rate rise, which I'm guessing is closer to even under 1.5%, because I don't see it happening at all. But throwing that aside, if you knew something was 15% likely and you can start to get 9 to 1 odds, 8 to 1 odds and better, then you might want to bet on it. And that's just a part of what positive gambling, which is a form of investing in my view, is. And I do find this very ironic that I wanted to bring it up, because you can make wagers on so many different things, as you can bet on whether Hillary Clinton will drop out of an election or not, as part of betting or gambling. But I guess that part isn't investing. It's just making a bet like you would in Vegas. Take care.